Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report about a company that's handing out cash, but before you get too excited, remember there's always a catch. We will be looking at Jefferies Credit Partners BDC Inc. and their recent announcement about a distribution, which is basically like a dividend payment for their shareholders. But is it really free money or are there strings attached? Let's find out. If you're into understanding what's really going on behind the scenes of corporate reports, make sure you subscribe and join our Discord channel linked below for more in-depth discussions. This is a Form 8K filing, also called a current report. Companies use these to announce major events that could be important to investors. It's like a corporate breaking news alert. The date on this report is May 29, 2025. The company we're looking at is Jefferies Credit Partners BDC Inc., a business development company. These companies invest in other businesses, often smaller or medium-sized ones. The main event here is the distribution they've declared. They're paying out $0.2303 per share to their Class I common stockholders. This payment is scheduled for June 16, 2025 to those who were shareholders on May 30, 2025. Think of it like this: if you own shares before the end of May of 2025, you're getting a check around the middle of June. Now, here's where it gets interesting. Shareholders have a choice. They can take the cash or they can reinvest it back into the company by buying more shares. This is known as a distribution reinvestment plan. It's a way for the company to get more capital and for shareholders to potentially increase their holdings. So what does this distribution really mean? Well, it could signal a few things. First, it could mean that Jefferies Credit Partners is doing well and has enough cash to reward its shareholders. Companies that are financially sound usually have higher distribution payments. It is a good sign if you want to attract and keep investors happy. Second, it could be a way to attract new investors. A company that pays out regular distributions might be seen as more stable and attractive than one that doesn't. However, you need to keep in mind that it could mean the company doesn't have much better use for this money. So giving it away might be the only option. Now let's step back and look at the bigger picture. Jefferies Credit Partners operates in the business development company space, which can be a risky area. These companies often invest in smaller, less established businesses, which means there's a higher chance of things going wrong. On the other hand, the potential returns can be high. One thing to keep in mind is that business development companies are subject to regulations. They have to follow certain rules about how they invest their money and how much they pay out to shareholders. This is meant to protect investors, but it also means that these companies have less flexibility than some other types of investment firms. So what's the verdict on this distribution? Is it a good sign or a red flag? Well, it's probably somewhere in between. On the one hand, it's good that the company has enough cash to pay out a distribution. On the other hand, investors should always be careful when investing in business development companies, given the risks involved. Now, what do I think of Jefferies Credit Partners? Well, based on this report alone, it's hard to make a definitive judgment. However, the distribution is a positive sign, suggesting that the company is doing reasonably well. But like any investment, it comes with risks. The success of Jefferies Credit Partners will depend on its ability to pick the right investments and manage those risks effectively. Looking ahead, one key opportunity for Jefferies Credit Partners is to capitalize on the growing demand for capital from small and medium-sized businesses. There's a lot of these companies out there that needs funds, and if they invest correctly, they might do very well. However, they also face the risk of economic downturns which could hurt the companies they invest in, and that's the main thing investors should be worried about. In conclusion, this distribution announcement from Jefferies Credit Partners is an interesting piece of news. It suggests that the company is doing okay, but it's important to remember the risks involved in this type of investment. Always do your own research and consider your risk tolerance before making any decisions. Alright, that's our breakdown of Jefferies Credit Partners' latest announcement. What's your take on this distribution and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.